Hey everybody, welcome back. Jim Ingersoll here hanging out with Adam AAA Adams, and you're going to absolutely love today's show because we're going to talk about something really relevant to today's market cycle, which is access to capital and all of the things that go with that, because when new opportunities show up, you don't want to be out there not able to buy property without a tremendous amount of capital, confidence rather. So if you can shop with confidence, then you can close deals a lot better. And that's what we're going to focus on today. Let me tell you about Adam, though, because he's got a lot to offer all of us with a lot of value add. Adam A. Adams, known as AAA Adams, I love the name, also known as AAA, has educated thousands of investors throughout the United States with real estate conferences, radio, and an amazing podcast as well called the Creative Real Estate Podcast. I'm sure many of our listeners today have listened to it. His efforts to educate and inspire other investors have also earned him the prestigious title Master Investor by Think Realty. Think Realty is a great group, and that's a great honor. And he's a 3-time Hall of Fame winner with the RE Mentor. In 2005, Adam took the plunge into real estate full-time, and it quickly became his passion. Today, Adam is partnered in 7 multifamily syndications with approximately 1,400 doors valued over $100 million. It's a lot. His company, BlueSpruce Holdings, focuses on finding and managing apartment communities to allow passive investors diversification, cash flow, tax benefits, and freedom of time. His primary role in the company is to attract capital, exactly what we're talking about today. Adam, it's great to be with you. How you doing?
I'm fantastic. Thanks for having me. I really appreciate it, Jim.
So let's talk about, like, what did you do before real estate, before 2005? And 2005 is about the same time I came in. So we've both been through a recession. We survived. It's all good.
So what did I do before 2005? I grew up as my parents are real estate investors, and my dad also owns some, it's still real estate in a way, agricultural land. So I used to water trees and stuff like that. But he found that he gets really good tax benefits with the agricultural stuff. So I grew up doing real estate before 2005. I collected rent. I guess it would have been in the 80s. I don't know, 10 years old, something like that, for the first time, just because one of our multifamily units, one of the tenants was actually late on their rent, and my dad was going to be late that day, and the tenant was leaving. So he asked me if I could go over there, which was only walking distance, and just pick up a check. So what I did before real estate was kind of real estate and landscaping, working on some of our units. I used to put up walls when I was young, run some electrical with my dad. He's a general contractor as well. So that's kind of what I did before real estate. But in 2005, I was in college, and my dad, he bought me a piece of land, and then he made me pay for it because his accountant said that I had to pay for it, or else he was going to have to pay a lot in taxes. So the only reason I bought that land in 2005 instead of just got given it is because my dad basically figured out he had to do that. So I still, even after getting into real estate in 2005, getting into multifamily in 2007, even after doing all of that, I was still working usually with my dad or in a restaurant when I didn't want to be outside in the heat. So the only 3 things I've ever done is real estate, bartending, and landscaping and general contractor work.
Neat. So where did you grow up? Where are you from?
Utah.
Uh-huh.
Salt Lake City area. I'm in Denver now. I'm in Conifer, Colorado. My family still lives in Utah, so I go out there a couple times a year.
Mm-hmm. Okay. So and then you started doing, in 2005, you started off doing like single family, and then you migrated to multifamily like a lot of people?
I started that was just a piece of land. So it was a cabin lot in Aspen Hills, Fairview County, Utah. And so my first ever was just land. And then my second one was multifamily. So I didn't own single family until 2016 is when I first bought my first house.
Oh, wow.
So
That's funny. So you did multifamily first, then came to some single family later.
yeah, exactly.
And 2007, I mean, the market really shifted right after that.
Oh, bad. Yeah, really, really, really bad. I lost an apartment community in 2011 that I bought in '08.
Yep.
So I bought it, and 3 years later, I gave it back to the private lender. My bank was a private lender, and I called him up one day and I said, "There's no way I can pay you the mortgage this month. I don't know what to do." And he said, "I know what to do, deed in lieu." And so I did that in 2011.
So and the market conditions during this pandemic are interesting to follow as well. We're both reading a lot of economics and things. Do you see any similarities? I mean, what's your take on what's going to come?
Yeah, yeah. I hate to speculate too much.
We don't have a crystal ball, do we?
We none of us do, and anything I could say could be wrong, and it could be right, and I don't want to come back either way. But I will say, just through pure speculation, what I'm seeing is there is a lot of similarities. I think there's a lot of people losing jobs right now, and there's a lot of people that are nervous, like they were back then. And what a lot of people seem to say is they told us 2 months ago, they told us, almost everybody was saying, this is going to be over in 2 to 3 months, and we're going to be totally through it.
Yeah.
And we're going to bounce back, and there's going to be no change to the economy. I didn't believe that back then. I still currently don't believe it as we're about the middle of May. I feel like it's going to be similar in some ways, whereas we are going to get hit in the beginning, similar to how we were hit in 2007-8. And I feel like what's going to happen is similar to what happened in 2008, where there was aftermath. There was other things that were happening slowly that were dominoes. Like this one hit that one, then that one knocked down the other one. And so, in my opinion, I expect that we're going to see for the next 2-ish years, we're going to see a steady decline and new things happening and new ways of working out. .com era, for instance, a lot of things went down because things had to change. This is a shift. There's a lot of businesses that are having to learn how to work online. And I think that there's going to be more things like that happening that kind of come out of this. And so I see some aftermath, or at least I'm speculating there to be some aftermath. And I don't think that anyone who said 2 to 3 months, I don't think any of them are right. I think we're going to see a recession, and I think it's going to be a couple of years. So that'll be fun to see either way. I'll tell you what we're doing in our business, just in case it's helpful to anybody. We've decided to not look at our bigger apartment deals and underwrite them for the next 3 to 6 months. So we've become bystanders or onlookers. We've become speculators for a minute, for 3 to 6 months. All we want to do is watch and learn and see if it turns out to be another 2008. If it doesn't, awesome, I was wrong, and we're back in it, no problem. If it does seem to be it, then we want to watch it instead of buy in the top of the market or as it's kind of tanking. So we're just going to wait for 3 to 6 months and look back again. And for anybody who is on the call listening and they're more on the apartment investing side, then this will resonate with them a little bit. We use something called a T12 in general. It's the last 12 months of financials when we want to purchase a property. So we don't just look at a comp like you would with a single family. we look at these T12s and look at the history of how the asset is performing. And so, yeah, when after 3 or 6 months, we won't be using these T12s anymore. We'll be using more of a T3 or maybe a T6, which means that we'll be very skeptical, and we want to see the worst of times when we're putting out a new purchase price.
Okay, so cap rates have been really compressed the last few years, and it's been really difficult to find really good deals, in my opinion, with the right value add opportunities. How hard is it to pull your finger off that trigger and just hit pause for a little while? Because for me, it's very hard. I'm a deal junkie at heart. You know what I mean?
Um, I I think it's not too difficult for me personally. I'm a very cautious person, and I just don't want to make a mistake. And to me, it would be more hard going through with one of these big deals because it's not just my money. If it was my money, only my money, and I was, just buying something easily affordable, and going to close on it, and I was the only one at risk, it would be probably a lot harder. But for me, the type of deals that we do, we raise millions of dollars just for one deal. So like this last one that we exited, it was 250 units,
Right.
and we were about to close it. The purchase price was 8 figures, but the amount that we raised was $6.2 million. And we decided that because we don't know what's going to happen and it's like their money, there's a lot of passive investors that were putting their trust in us. It was a lot easier for us to, even though my company we were losing like $510,000, that's with the earnest money and the acquisition fee that we're not getting. So the earnest money that we were losing and the acquisition fee that we're not getting, it's 510 or 515,000. And it was a sad decision, but an easy decision, because we knew that it's better for us to lose than for our passive investors to lose.
That's a good point. So when were you getting ready to close on that in the timeline that we're on? Was it just as things were crumbling?
April 15th was the close date. And that's the date that we were supposed to close. And I think we backed out of it in the beginning of March. So we had like 6 weeks, 6 weeks before closing. Yeah. And
It is hard.
way past on the earnest money going hard.
Sure. But I think it was a wise decision because, I think hitting pause right now is super smart. I agree. It's what people should do, and just watch frame by frame to see what's coming, because none of us really know. You may be able to go out and buy a similar deal at a better price 6 months from now for a year.
Totally, completely. Or buy the exact same deal and save $1 million.
Yes. They may sell it to you a little cheaper, the exact same deal. You never know.
Yeah.
You don't know. So, and I think hitting pause is smart, but once we know what's going to happen, and if opportunities return and there's better deals, having access to capital is everything.
Completely.
Well, that's what I want to talk about, because you do a really good job coaching people and showing them how to go about raising capital. Can we talk through some of the specifics on how to do that?
Yeah, definitely. What I'll say first is that everything in life is sales. Everything in life is some type of sales. And the most important thing to getting somebody to do business with you or to buy your product is the know, like, trust. So for me, I try to streamline this process of raising money into those 3 parts. So it's, what can I do to get the most amount of people to know me, most amount of people to understand who I am in case they're looking for someone like me. And so that's at the top of a funnel. I look at it like a funnel, because if I I had a event, and at the event, what we did is we took 10 groups, and we gave them a water bottle, And then we gave them a orange bucket from you know where, one of those orange Homer buckets.
Yeah.
And we said pour the water into the bucket. And then we asked them, was that easy? And they said, yeah, that was super, super easy. I said, great. Now pour the bucket, the 5-gallon bucket, back into the water bottle. And so they tried it, they did it. And, out of 10 groups, one group that took forever, one group did not spill. I was surprised to even know that one group could do it without spilling, but they took about 5 minutes to pour this in. And I said, is there anything that could have helped you not spill? And they said, yeah, a funnel, obviously a funnel. And so I pulled out these funnels that I had hidden, and I gave everybody a funnel. And I said, pour it back in, and now do it over. And nobody spilled. And nobody took 5 minutes. It only took a few seconds to pour that in. And so this is how we use a funnel. The know, like, trust. Know is the big mouth of the funnel. Like is in the middle, and trust is at the bottom when they're actually hiring you, or with raising capital, they're actually investing in the deal for you. So with the know, we need to find out, how do we put ourselves out there? Because we're never going to do business if nobody understands who we are. So the things that I share with clients to make sure that they can get known is to do things like write a book, or start a podcast like you have, Jim, a great podcast where a lot of people get to know you. Mm-hmm. Or other options would be to have a blog, or to host a Facebook community. I think you have a Facebook community as well. To host a Facebook community, these are the types of things where people start to know who you are. They're referring their friends, hey, you should join this group, you should listen to this podcast, you should read this book, you should read this blog, you should watch this YouTube channel. So that's at the biggest part of the mouth. And then on the like factor, for somebody to show that they like you, they need to give you something, like money or their email address. And so what we use for this part of the funnel is free giveaways. So what we'll do is, you're trying to raise money. That's what we're talking about today, private capital. You're trying to raise money. So you think about your avatar, you think about your person that needs to get rid of some money and invest it in a deal. And you start thinking about what they need, and you create some type of, I call it a lead magnet. Yep. But for your listener, it can just be, let's just call it a piece of paper that has value. And so it might be a checklist around understanding how to vet a passive opportunity, or a passive deal, or an operating team that's going to be running the deal. So you give them a checklist of, make sure that you are doing a background check on your sponsor, and you've given them all this good information for free in exchange for their email address. And now they really like you, and they proved it by giving you a reciprocity, giving you their email address. And now what you'll do is, you'll try to stay in front of them, and you'll give them more value. And I use something called a call to action. So right now, they're not technically on your passive investor list. They've just said that they trust you enough to get that thing for free. But later on, you need to call them to action. So we use, I teach clients to send out multiple emails. So if you don't have that email sequence already ready to go, then you're not going to end up raising enough capital. You're not going to be staying in front of people. So what we'll do is, we'll just say, after you've given them a lot of value, you say, this is what you do if you want to be a passive investor. You tell them the next thing. Okay, sorry. I saw your mute go off, and I thought that we were, I missed,
my dog is
something.
Barking. I'm working from home like everybody in America.
Yes.
Go ahead. No, that's awesome.
Forgive me. Okay, so what we teach is that you've got to have a way for them to, after adding a lot of value, for them to actually decide that they want to be on that list. So you'll just call them to action. You'll say, hey, if you want to do this, if you want to get this thing, if you want to invest passively, if you want your money to work for you, here's the next steps. And then they join your list. So the bottom part of the funnel is as they're joining, they're finally saying, I want to invest with you, invest money with you. And then other things that we do within this smallest piece of the funnel to make sure that they're going to the next level is you're having investor calls. You have some type of CRM system where it's just for your passive investors. You're hosting webinars that give information about the things that they're going to be investing in. In our case, it's all multifamily stuff. But if you're more looking for just a private lender who will invest in your fix and flip, I can give you some other types of things that have worked really well for me in the past when I was doing single family in 2016. And I raised a lot of capital for every deal that we needed through 16, 17, and 18, and 15. What I did is I went to other people's meetups, and all I did was answered questions. All I did was helped people, added value. That's really all I had to do. And the private lenders just came out. They just like flocked to the people that are answering the questions, seem like they know what they're doing. So that's how I got most of the deals, where somebody would just come and say, hey, I've got 100,000. Do you have any fix and flips coming up that we might be able to do a joint venture on? So if you are looking to raise money that way, I think that's the best way to do it. For me, my meetups helped a lot when I was hosting my own meetup group. All I did was I gave everybody an opportunity to introduce themselves at every event. Even when I had 176 people once for my lunch club, I still gave everybody an opportunity to introduce themselves. So I have them say what they're doing, and then all I do is I get up and I say, this is what I do. If you want to know more about it, reach out to me. And what's interesting, when you're running those events versus just attending, it's even easier to attract that capital. It goes back to the big mouth of the funnel. But people trust you even more when they know that you have a good reputation. They know you've been around a while. Your name is easily searchable, and they can't find any dirt on you and stuff like that. So once you're hosting the event or hosting the podcast, it's going to be even easier for them to look at you first as the expert versus the other people at the event. And I can go into any details that you want on any part of the funnel.
Was really good. The first part was sort of like a version of ClickFunnels. I really liked that. It was like ClickFunnels for private lending. I loved it. And then everything else was like how to attract, like, you got to be able to promote yourself a bit, but just like educate people on what you do, and then you can attract the capital back. Is that kind of what you found over the years?
That's definitely the thing that's worked the best for us is giving.
Yeah. Giving first. I agree with that as well. And so if somebody's brand new and they've never done any financing other than with a bank, and you're looking for your very first one, then you've got to figure out how you're going to connect. I like the way you defined avatar as well. Could you define that a little bit more? Because then you can figure out how to tell people what you do, educate them.
Yeah, so avatar, there's 3 definitions for avatar, and I'm only really using one of them. So one of the definitions is the blue guys in that movie, and that's not an avatar for what I'm talking about. The other one is a cartoon version of yourself, and that's, again, not what I'm talking about. When I'm talking about an avatar, I'm talking about just your ideal client. And this is a piece that a lot of people completely miss. Is they might start a podcast but they aren't actually attracting who they want to attract. They're just doing, they're just spinning their wheels or doing something just to do something. None of it is perfect for their ideal avatar. So for me, I'll tell you about my passive investor avatar. I have got this person. He even has a name. I know what he looks like. I know what he's into. I know what he's afraid of. I know how many kids he has. I know how old he is. I know what his job description is. I don't have an avatar that it's, oh, my perfect person is somebody that makes a lot of money. It's not that. My perfect person is an engineer, 42 years old, Indian, male, with 2 kids, who's already invested passively in apartment communities and has at least $1 million left to continue to invest, and that I can have a beer with him. So that's my exact perfect avatar. And what I do is when I'm out and about at conferences, I've been really blessed in the multifamily space to have a lot of podcast listeners and things like that. So when I just go to anyone's multifamily group and people start kind of bringing people to me, hey, he can answer your question or he might be able to help. When I see somebody that fits that avatar, when they have those kids, they are male, Indian, 42-ish years old, I immediately say, hey, let's grab a beer. I want to talk to you more about what you do. Because my father, my biological father anyway, I told you about my stepdad earlier, who I grew up with, collecting rent and all that. My bio dad is an electrical engineer, and I love and I'm fascinated with the way engineers think. It's not my natural way to think. I'm more of an entrepreneurial person. I'm more of like looking for opportunities and not sitting down at spreadsheets. And I just think it's so fascinating. So I actually can enjoy 100% without being a sleazy salesperson. I can enjoy sitting down with an engineer and just talking about what they do and how they do it and how they think and about their life. And it eventually turns into doing business with me. So for your listener, they might have an avatar that is a woman or any other color besides Indian or any other age besides 42. I don't discriminate because I have an avatar. I have passive investors that are, all of the races and all of the ages, 60s or 20s. It's not that I don't provide value to others, but when I think of a new episode idea for a podcast, when I think of a new lead magnet, I want to attract Siva. Siva is my 42-year-old male Indian engineer. I want Siva to keep listening to every podcast. I want Siva to get value from this lead magnet. I want Siva to do this thing. So everything I do, I would suggest to your listener, it's easy for me as a visionary to always visualize everything that I'm doing. But if your listener isn't as visual, then they ought to get a picture of their perfect avatar and put it on their computer. And every time they're creating more content, every time they're creating a podcast or whatever, they've got to add value to him or her. So that's avatar.
I love it. You didn't probably know this, but I'm a recovering engineer as well.
Okay, that's why we get along, Jim.
Maybe in electrical. So I'm just saying,
wow.
like, I've got a master's in engineering management, but I left all that behind about the same time you went into this full time. So, but I mean, that's always, I've had to like retrain my brain because we're used to controlling inputs to get the desired output and formulas, equations, and calculus. None of that applies. You got to make this in real estate pretty big decisions with limited amounts of data with the opportunity of being wrong too. So yeah, I've retrained myself here, but it's all good. So I understand. I love that. The way that you put it into such a small little box, like, who that person is. I've never seen somebody present it that way to me before. So thank you for doing that.
Yeah,
That
absolutely.
is amazing. So if somebody, and you do coaching for private lending as well, I mean, where would somebody get that information?
Raisingmoneycoach.com. Raising Money Coach, and then they would be setting up an appointment with me. They could go to raisingmoneysecrets.com, which is really more of an online virtual training. Nothing's live with Raising Money Secrets. With Raising Money Coach, it's all one-on-one stuff. So.
Okay. Well, I really appreciate your being my guest today. I want to respect your time, Adam AAA Adams. I love your name.
Thank you.
So have you had the AAA part of that for a long time?
You know, my middle name is Abel, and growing up, people would call me Double A until they found out that my middle name was an A, and then they would immediately call me Triple A. Or I'd be walking through high school between classes, and people would be like, "That guy's name is Adam Adams." But yeah, AAA was a name given to me by many, many people before I ever was willing to accept it myself. And I think it's helpful. There's not a lot of Adam Adamses. However, I've personally met 6 so far, 6 different Adam Adamses. And so I think it is good to kind of distinguish yourself when we're talking about anything with you attracting more capital or attracting anything. I think it's incredibly important to separate yourself. So everything that we do, I want to be unique in it. So nobody else is called Adam AAA Adams. So I changed my Facebook name to that a few years ago.
I love it. And if somebody wants to connect with you through one of your websites or your Facebook group, what's the best place to go?
Absolute easiest way is to go to raisingmoneycoach.com. And if they'd like to book a call with me, they can. There's a button for it right there.
All right, very good. Adam, thanks for being my guest today. I look forward to getting on your podcast because Creative Real Estate Podcast is rocking. So thanks for being a giver in that way as well.
Thank you, Jim.
And everybody who tuned in today, you might want to go back and listen to this twice because access to capital in the coming market is going to be critical. And you don't want to rely on banks and institutions, rely on private funds from engineers, people like myself. And you guys can go out there and do that. Everybody can raise capital. Believe me, guys, I am not a salesperson. You guys know I'm an engineer. So like I'm the least amount of salesy person. I don't like to pitch, sell myself, beg for money. But if you can learn to attract money, you can unlock as much private capital as you want. And you can go out there and scale in any way that you want. There's nothing too big for you. Thanks, everybody, for listening in. And Adam, AAA Adams, thank you. I really enjoyed this today.